a simpler, better bank. We wrote to our customers in September. Here's one of the responses we've received.
I think one of the particular sentences is, "I'm sorry for the mistakes we've made. My job now is to fix them." So it's all very well to have the letter, which is very positive, very good, but actions speak louder than words.
We've been listening to customers, communities, you, our shareholders, and our own people. And we're taking action. We're simplifying our business. We're demerging our wealth management and mortgage broking businesses. We're selling our life insurance arm, and we've removed frontline sales incentives to focus on service.
We are making sure that we're doing absolutely the best job we can to deliver a simpler and better bank for our customers.
We're changing our culture.
Better Starts Now is the umbrella program through which we're going to drive the renewal of the bank.
I think we're all committed to this journey that we're going to go on together.
Better starts now, and better starts with us.
This transformation included a new code of conduct that's simple and action-oriented, guided by a renewed purpose.
What I would like is for every single person inside the Commonwealth Bank to feel like they're individually contributing to the purpose to improve the financial well-being for our customers and for our communities.
We're helping more customers and communities in need. We're investing in initiatives to champion fairness, protect the elderly from financial abuse, help women in financial hardship back into the workforce, assist customers affected by domestic violence, and support our farmers.
Commonwealth Bank is donating to drought relief. It's giving $1.75 million for people in communities struggling during the drought.
By facilitating additional donations through CanGive, a new digital tool in the CommBank app, we've raised close to $8 million to various drought appeals.
Amazing effort to raise the money they've raised, and it's a credit to them, yeah.
And for a community that I'm passionate about, I want my kids to grow up here and I want my kids to add value here as well. So I want this community to do well.
We're innovating the ways customers can control their finances. The CommBank app is #1 in Australia, used by 5 million people. Customers can now get help from CBA, our secure digital assistant. Check the spend tracker to know where their money's going, get credit card payment reminders to avoid late payment fees, and get smart alerts to avoid overdraw fees. We're striving to be leaders in data privacy and cybersecurity, and we're constantly exploring the future of banking, including groundbreaking blockchain experiments with partners such as the World Bank. We're working from a strong foundation. We're one of the best capitalised and most secure banks in the world, and we're continuing to ensure we work on sustainable, balanced outcomes for all shareholders. Importantly, we know that all of this is just the start.
Good morning, ladies and gentlemen. My name is Catherine Livingston, and I'm Chairman of the Bank's Board. On behalf of my fellow directors, it's my pleasure to welcome you to the 2018 Annual General Meeting of the Commonwealth Bank. I also welcome the shareholders and others joining online. I would like to acknowledge the traditional owners of the land on which we meet, the Jagera and Turrbal peoples, and acknowledge their elders, both past and present. I also take this opportunity to thank our shareholders and customers for responding to our drought relief appeal, which raised $7.8 million for household support and feed for livestock. This has been an extraordinary display of generosity by Australians who've responded to the call for help and donated. More than half of the funds raised were made through our app, which shows the way effective and convenient technology can really make a difference. I also thank our partners, the Red Cross and the Country Women's Association, for their tireless efforts to see the funds distributed to communities in need. Safety is viewed as a high priority at the bank, so I'll briefly outline the venue's safety procedures. If an emergency occurs, I will adjourn the meeting and ask everyone to walk towards the exit signs. Please follow all directions from the Convention Centre staff and listen for further instructions via the public address system. Would you now kindly switch off your mobile phone or put it on silent during the meeting? And in addition, please don't take photographs, film or record the meeting. We have a quorum and I declare the meeting open. A notice of meeting has been distributed and I will take it as read. I would now like to introduce your board, the Chief Financial Officer and the Company Secretary. So from my far right, Rob Whitfield, Andrew Mole, Wendy Stops, Sharish Apt, Chairman of the Risk Committee, Taryn Morton, our Company Secretary, Matt Common, Chief Executive Officer, Alan Docherty, our Chief Financial Officer, Anne Templeman-Jones, Chairman of the Audit Committee, David Higgins, Chairman of the Remuneration Committee, Mary Padbury and Brian Long. Also with us today are other members of the bank's senior management team, and they'll be available to speak with you after the meeting along with the directors. Mr Matthew Lunn from our auditor PwC is in attendance, and he will be available to respond to any specific questions you may have on the conduct of the audit. PwC's written responses to questions which were received prior to the meeting and directed to the auditor are available from the share registry desk in the foyer and from the Company Secretary on request. The agenda for today's meeting is as follows. First, I will address the meeting. Matt Common will then speak, and after Matt's address, we will proceed with the formal items of business as set out in the notice of meeting. So shareholders, as you know, it's been a very difficult year, with confidence and trust in the bank damaged by conduct and compliance issues. I first addressed you as chairman of the bank at last year's AGM, and just 3 months prior, we had been notified of AUSTRAC's legal proceedings, and shortly after, the Australian Prudential Regulation Authority, or APRA, announced an independent inquiry into the bank. Later, in December, the Financial Services Royal Commission was established. These inquiries have scrutinised our failings of judgment and of leadership, and of systems and of processes. Most confronting is that these shortcomings led to cases of poor customer experience and examples where we did not act in the best interests of our customers. Your board and I regret these failings and apologise without reservation to our customers, to our staff, to you, our shareholders, to our regulators, and to the broader community. In my address today, I will outline the actions that your board and management have been taking to prevent these failings from recurring and to transform the bank into a simpler, better bank that will restore your confidence and trust in us. The most important of these actions was appointing a new chief executive, and in January we announced that Matt Common would commence as CEO in April. The board believes that Matt has the experience and values to lead the bank. This includes the ability to respond to community expectations and to address our regulatory and reputational challenges, while also maintaining momentum in the business at a time of rapid technology change and intensifying competition. Matt, in turn, has now appointed a very capable executive team with the experience and the leadership skills to deliver cultural change and the bank's strategy. Turning now to the major regulatory matters that have occurred during the year. In June, the Federal Court approved our settlement with the Australian Securities and Investments Commission in relation to the bank bill swap rate legal proceedings. The Federal Court also approved the settlement of the proceedings commenced by AUSTRAC, whereby we agreed to pay a civil penalty of $700 million. This is a very large sum of money and understandably of serious concern to shareholders. However, when considering how best to resolve the matter in shareholders' interests, the board formed the view that settling the case would allow us to focus, without distraction, on strengthening the bank's financial crimes regulatory compliance capabilities and on a constructive working relationship with AUSTRAC. With respect to the 2 class actions arising from the AUSTRAC matter, we maintain that at all times we have complied with our continuous disclosure obligations and intend to vigorously defend both claims. APRA's prudential inquiry, announced in August last year, focused on our governance, culture and accountability frameworks. The final report, delivered in May, was highly critical of the bank, but was fair and constructive. We are implementing all of APRA's recommendations, building on changes that were already underway to improve the way the bank operates. The board has implemented more rigorous governance and risk management standards, and we are working with management to build a more accountable, customer-focused and transparent culture. We have simplified our purpose, which is to improve the financial well-being of our customers and the communities that we serve. We have clarified our values so that everyone at the bank understands what's expected of them, and we have a new code of conduct that sets the standards of behaviour for which everyone is accountable. To reinforce accountability, we have further strengthened our remuneration policies. This year, the board determined that there should be individual and collective accountability for the findings of APRA's prudential inquiry and for the poor customer and risk outcomes that have occurred, including those which led to the action launched by AUSTRAC. Accordingly, we decreased remuneration for current and former executives through reductions to current year variable remuneration, prior year deferred remuneration, and the forfeiting of unvested awards. This was in addition to the board's decision last year to reduce non-executive directors' fees and to reduce to zero the short-term variable remuneration for the then CEO and group executives. The total impact for all employees and directors over the 2017 and 2018 financial years has been a reduction exceeding $100 million in remuneration outcomes. Turning now to the Financial Services Royal Commission. In September, the Royal Commission delivered an interim report which focused on the causes of misconduct across the financial services sector and what can be done to prevent such conduct. The interim report was rightly critical of the financial services industry. We recognise that in relation to our bank, the misconduct examined raised questions about competency, complacency and priorities. When people or processes failed, there were neither the systems nor processes in place to identify and fix the problems, nor a sufficient sense of urgency to identify the root cause and take steps to prevent similar issues arising again. Our focus on improving overall customer satisfaction also obscured and distracted us from focusing on customer dissatisfaction, which would have alerted us to many of these issues sooner. We also acknowledge the Royal Commission's criticism that too often a focus on profitability disadvantaged some of our customers. We agree that this imbalance is not acceptable. There is much to be done to address these failings, and significant programs of work have been underway for the past year. Some of the issues raised during the Royal Commission had already been resolved and affected customers compensated in prior years. Over the past 6 years, the bank has spent approximately $580 million improving our advice business processes and paid approximately $270 million in compensation, including interest, to customers who were provided with poor quality advice or charged fees where the service was not provided. Further changes already implemented include the retail bank's move to increase transparency by disclosing mortgage broker commission rates to borrowers, and our decision to rebate grandfathered commissions for Commonwealth financial planning customers. Later this month, Matt Comyn will appear at the last round of hearings, and the Royal Commission's final report is due early next year. As a result of our resolute focus on improving customer and risk outcomes, we are very clear on what is required for the bank's future success. Our strategy is to become a simpler, better bank that delivers balanced and sustainable outcomes for our customers, our community, our people and shareholders. I've already described some of the changes we are making to become a better bank. To become a simpler bank, we are focusing on our core retail and commercial banking business. The sales of our global asset management and life insurance activities represent significant value for shareholders and are positive for our customers and our people. We also intend to demerge the group's wealth management and mortgage broking businesses to enable the bank and the demerged company to pursue the growth and investment decisions appropriate to each business. In line with our commitment to long-term sustainable outcomes, this year we adopted the recommendations of the Task Force on Climate-Related Financial Disclosures and have reported the impact that various climate risk scenarios could have on our home lending, home insurance and business lending portfolios. We have also disclosed our lending exposure to energy-related businesses, which shows movement away from coal and towards renewables and gas as a transition fuel. Although the 2018 financial results were impacted by a number of one-off items, including the AUSTRAC penalty, our results reflected good underlying business performance. We also took on more long-term wholesale funding, and our balance sheet continued to strengthen. We remain one of the best capitalised banks in the world. This performance enabled us to continue to invest in service and technology for our customers and to deliver a strong dividend for shareholders. The full-year dividend increased 2 cents on last year to $4.31 per share, fully franked. 3/4 of the bank's cash net profits after tax were returned to shareholders, amounting to $7.6 billion. We were also Australia's third largest taxpayer. The bank paid $4 billion in corporate tax globally and a further $500 million in payroll tax, unrecoverable GST and FBT. The $700 million AUSTRAC penalty was not deductible for tax purposes. In line with our commitment to good governance, board renewal has continued. Andrew Mole and Brian Long, both long-standing directors, are retiring this year. Andrew will step down at the conclusion of today's AGM, but at the request of the board and to allow for sufficient continuity and director succession, Brian has agreed to serve until December 31. On behalf of the board, I would like to thank both Andrew and Brian for their service and commitment to the bank. In March, Anne Templeman-Jones joined the board and will be offering herself for election today. Anne is an experienced listed company director and has a strong background in accounting, risk, corporate banking and financial advice. In September, we announced that Paul O'Malley would be joining the board from January 2019. Paul was the CEO of BlueScope Steel for over 10 years and also served as its CFO. He brings to the board extensive operational and finance experience as well as business leadership. Paul will not be standing for election at this meeting as he has not yet joined the board. In accordance with our constitution, I will also be offering myself for re-election today. Shareholders, while this has been a very challenging year, we have a clear purpose and direction to transform the bank. The commitment which our people show to our customers and to the bank's purpose give me great confidence that the business will perform well and deliver for our stakeholders. I would like to sincerely thank our people for the work they do to improve the financial well-being of more than 16 million customers and the communities in which we operate. To my fellow directors, thank you for your determined efforts this year to secure the bank's future. I would also like to thank you, our shareholders, for your loyalty and support through these challenges. My commitment, alongside that of your whole board and management, is to implement the changes necessary to restore trust, to deliver on our strategy to be a simpler, better bank, and to meet the high standards of performance, accountability and integrity which you expect from the Commonwealth Bank. I will now ask our CEO, Matt Comyn, to address the meeting. Matt.
Thank you, Catherine, and good morning, everyone. I'd like to also acknowledge the traditional owners of the land on which we're meeting today and pay my respects to their elders, both past and present. This is my first opportunity as your Chief Executive Officer to address the annual general meeting of shareholders. It's a great privilege to lead the Commonwealth Bank. Leading this company also comes with great responsibility, never more so than now. The Commonwealth Bank serves more customers in more communities than any other Australian bank. Every day, we work hard to improve the financial well-being of our 16 million customers. We employ more than 49,000 people in 15 countries across 1,300 branches and offices. We purchase products and services from more than 8,000 businesses, both large and small, and we have more than 800,000 shareholders. By some measures, the past decade has been among the most successful in our company's history. But what's become clear in recent times is there have been far too many instances where we have let our customers down and in the face of financial success, we became complacent. We have been too slow to identify problems, too slow to fix underlying issues, and too slow to put things right for our customers. This has also impacted on you, the owners of the bank. I join Catherine in acknowledging that this is completely unacceptable. Since becoming your Chief Executive in April, my focus has been on taking action, fixing what is broken, doing the right thing by our customers and communities, and building a simpler, better bank. I've made 7 appointments to my executive leadership team from inside and outside the bank to drive the change and lead our people through this period of renewal. All of my senior team are here today, and for those of you who have time to stay after the meeting, there will be an opportunity to speak directly with me and with all of them. I want to assure all of you that my team and I are very focused and energised by the road ahead and the opportunities to better serve our customers. We have a clear strategy and we're making meaningful progress step by step, day by day. We're focused on simplifying our business, leading in our retail and commercial banking business in Australia and New Zealand, and continuing to build the best digital banking experience. By focusing on our largest businesses, we are continuing to deliver strong financial performance. In our first quarter trading update released this morning, we reported an increase in cash net profit after tax of $2.5 billion. While income growth was subdued, the fundamentals of our business remain strong, highlighted by sound credit quality and balance sheet strength. We are already on the way to simplifying our business portfolio. This includes the sale of our life insurance businesses, the sale of Colonial First State Global Asset Management, and our plan to demerge our wealth and mortgage broking businesses. Last week, I was pleased to announce the highly experienced executive, Jason Yetton, as the incoming Chief Executive for the Wealth and Mortgage Broking Company. But most critically, we're working hard to better serve our customers and to earn the trust of our community. This starts with listening. Since I started as Chief Executive, I have met with customers, shareholders, community leaders, and our regulators. I understand the challenges that we face. In September, I wrote to 8 million customers to apologise for letting them down, to share with them the actions that we're taking to put things right, and to invite their feedback. I have received more than 10,000 responses, a mixture of complaints, compliments, and general suggestions from our customers on how we can become a better bank. My leadership team and I are personally engaging in long-standing disputes to review these with fresh eyes. Already a number of these have been resolved. Many of these cases are complex, and while not everyone has had the outcome that they had hoped for, we are committed to ensuring that every customer is heard and treated fairly. To ensure the resolution of complaints continues to receive senior management oversight and attention, I've elevated responsibility for complaints management to David Cohen, our Deputy CEO. We have changed the way we manage customer complaints to ensure they're resolved quickly, fairly, and compassionately. This includes introducing new principles for complaints handling and providing more resources to our complaints team. I'm also pleased to announce today the establishment of an external advisory panel which will provide me and my leadership team with a further source of new ideas and external challenge to help shape our engagement with customers, employees, and our community. The panel will be chaired by Patricia Faulkner, AO. Patricia has a strong background in consumer affairs and health and served as Deputy Commissioner to the Royal Commission on Family Violence. But we are not just listening, we are taking action. For example, we have changed branch incentives for branch staff to reward service rather than sales. With strengthened lending practices to ensure we lend responsibly, with more inquiry into our customers' financial circumstances. And we're systematically fixing processes to make banking easier for our customers. We've increased investment in technology, systems, procedures and account monitoring to keep our customers' money and personal information safe, secure and private. For example, since May, new controls have helped our customers save over $3 million by protecting them from payment scams. We are using our leadership in digital to provide greater transparency to customers on fees and charges. One example is helping our customers avoid fees when they overdraw their accounts with smarter alerts through our CommBank mobile banking app. We've made positive changes for our small business customers. We've introduced fairer contracts and established a dedicated team to help small businesses facing difficult times. We've also partnered with AIA, a leading global insurer, to deliver new and innovative insurance solutions for our customers. And we're continuing to take action to address past failures in our wealth management business. We're also working hard to be more engaged in the community. Earlier this year, we put in place measures to support customers who are affected by the drought. These measures mean that 1,500 farming customers are eligible for a one-off credit adjustment. We've helped raise close to $8 million to support the needs of drought-affected communities. This includes our $2 million contribution and almost $6 million from staff and customers who have generously donated in branch and through our mobile banking app. Last month, we renewed our long-standing arrangement with Australia Post to ensure that customers and communities, especially those in rural and regional areas, have access to more banking services across Australia. I recognise, given the scale of challenges that we face, that these changes are only the beginning of what we need to do to become a better bank. We do, however, start from a strong position. Our goal is to use our unique market position, the skills of our people, and innovation to deliver outstanding service for our customers. Service that consistently demonstrates the best of the Commonwealth Bank. We have more retail customers than any other Australian bank. We also have leading market share in home lending, transaction accounts, personal loans, and credit cards. We don't take any of this for granted. We are best positioned to serve our customers, and this includes the largest branch network, Australian-based call centres, energised people, and a great digital experience. We have about 5 million regular users of our CommBank mobile banking app. This app has a Net Promoter Score, which is a measure of how willing customers are to recommend it, of +38. This is more than 10 points higher than our closest major bank peer. Through market-leading technology and exceptional service, we are creating a better bank for our customers. Their loyalty and trust is fundamental to our business. I want to thank all of our people for their hard work and dedication in what has been a difficult year. And I particularly want to thank you, our shareholders. The majority of you are long-term investors in the Commonwealth Bank and, of course, want to see the bank do well now and into the future. We have a plan to deliver a simpler, better bank. We are listening to you and to our customers, and we are taking action to change, to restore your trust, to deliver sustainable value for you and for all of our stakeholders. I hope that you can see that we are making good but early progress. But we have a great deal to do, and I want you to judge us not by our words or promises, but by the actions that we take and the progress that you see day in and day out. I appreciate and do not take for granted your support in enabling us to do this. Let me pass you back to the Chair.
Thank you, Matt. Before addressing the items of business and inviting questions, I will outline the procedures for the meeting today. When registering your attendance, you would have received a card, and you need your card to ask a question or re-enter the meeting. Green cards are for shareholders and proxy holders who may speak and vote. Blue cards are for shareholders who may speak but not vote. All other persons are welcome to attend, but may not address the meeting or otherwise participate. Before voting on any particular item, I will introduce each item of business separately and then invite questions. I will ask shareholders and proxy holders who wish to speak to move to the closest microphone located in this room. Please show your green or blue card and identify yourself to the microphone attendant who will introduce you to the meeting. If you are not here in your own personal capacity, please identify the shareholder you are representing. To ensure all shareholders and proxy holders have an opportunity to speak, I will take one comment or question at a time, and I ask that you make your comments and questions as concise as possible. I also ask that questions be confined to the business of the meeting. If you have a customer question, please speak with our representatives from the customer service or customer advocate teams who are here in the meeting and also available in the foyer area. If your question relates to a particular item of business, please ask your question when we come to that item. I would also ask that you are respectful of others during the meeting to ensure that we can have a constructive discussion on all matters. Following discussion on each item, valid direct and proxy votes will be displayed on the screen, and I will then ask you to vote on the item. Voting on all items will be conducted by poll, which I now open. If you wish to leave the meeting early, you may complete your green voting card and place it in one of the ballot boxes as you leave. The ballot boxes are located near the exits and are attended by representatives of Link Market Services, the bank's share registry. Link Market Services will count the votes, and Mr Matthew Lunn of PwC will act as observer for the poll. As the results of the poll will not be available before the meeting closes, they will be released on the ASX and our website later today. A light lunch will be available from midday. To avoid interrupting the meeting, I ask that all refreshments be taken in the foyer area. I will not be adjourning the meeting for lunch. There are 4 items of formal business today. First is discussion on the 2018 financial statements and reports. Second is the re-election and election of directors. The third is the adoption of the remuneration report. And the fourth is the grant of securities to our CEO, Mr Matt Comyn. We will now move to the first formal item on the agenda, which is to discuss the financial report, the director's report and the auditor's report for the year ended 30 June 2018. While there is no resolution on this item, it is an opportunity for shareholders to ask general questions. And I would highlight that this is the time for questions on the reports, management and operations of the bank generally, as well as the conduct of the audit. I now invite shareholders and proxy holders to move to a microphone to ask any questions or to make comments. Can I have microphone 2, please?
Good morning, Chairman. I would like to introduce Mr Brian Mitchell, who is a shareholder.
Relax, I'm not going to ask what you're doing about lending money to properties on low-lying land that because of climate change is going to be inundated in 127 years and 6 months' time. I have come simply to hand a letter to Mr Matt Comyn because there seems to be a problem in getting mail through. Very briefly, and I'll be as brief as I possibly can, last March I sent a letter to the CEO of the Commonwealth Bank, very simple, asking what documents the executors and trustees of my estate would need to take into the bank to open a certain type of trust account. Being a patient man, I waited till October and didn't get any reply. Then I got the wonderful letter sent out to all shareholders in September, how you're really going to improve things. So early October I wrote again, still haven't got a reply. Now, given that the Executive Office would be staffed by the brightest of the bright and a very capable person would open and vet Mr Common's mail and without brief reference to him, send it down the line. And as we're told, all the staff now are hell-bent on giving excellent service to the customers. One wonders why I haven't had a reply. Well, the only answer I can think of is Australia Post.
So
they've let us down. So to make sure that my letter does get through, I thought I'll take the time, trouble and expense of coming to the annual general meeting and handing my letter personally to Mr Common, which I can't do because there seems to be a Praetorian Guard down the front there.
Right.
So
Mr.
please, would somebody from the Commonwealth Bank come and take this letter and give it to Mr Common, and then for the next few days I shall anxiously watch the mail to see if I get a reply.
Mr Mitchell, thank you very much, and we won't hold Australia Post to account. It's clearly a failure of our processes to make sure that your letter arrived at the right place for you to get a response in a timely way. I think one of our customer service representatives has taken the letter now, and we will make sure that it gets to Mr Common and to the appropriate person to respond to you in a much more timely manner, e.g. today. Microphone 1, please.
Chairman, I would like to introduce Jeff Walker, who is a shareholder.
Good morning, fellow shareholders. I'm not too sure it's a good day for the board. My question is, with the advent of a federal election coming up before May, what policies and procedures or proposals does the board have to ensure that us, the shareholders, the grey nomads, get all the franking credits back?
Thank you, Mr Walker, and while we won't speculate on what policies may or may not come into place after the next election, can I assure you that the board is very aware of the importance of dividends and of franked dividends to our shareholders. We make our dividend decisions every 6 months, as you know, when we look at our half-year and full-year results. But the amount of the dividend and the franking that we can pass on to shareholders is it's paramount consideration. So thank you for your question. Microphone 4, please.
Chairman, I would like to introduce Mr Mark McVeigh, who is a shareholder of the bank.
Hi. So does the board accept that in order to meet the goal of holding global warming below 2 degrees Celsius, it is necessary to stop the expansion of the fossil fuel industry? And if so, will the bank not only commit to reduce its coal exposure, but also commit to stop financing projects that expand the scale of the fossil fuel industry as a whole?
Thank you, Mr McVeigh. I think you would have seen from our climate policy position statement that we absolutely endorse the Paris Agreement and the commitment to 2 degrees. In terms of the practical application of that, we are focused on ensuring that we support the transition of our clients so that we can get to a net zero emissions by 2050. I think if you look at our annual report, we have actually reduced our coal exposure in our lending portfolio over this year, and we have increased our exposure to renewables. So we're very actively supporting our customers to focus on what they can do to get us to a low carbon economy, and that's our commitment. It's unlikely I would say that new greenfield fossil fuels proposals would go through and be accepted when we apply our ESG or environmental, social and governance criteria, which we do to every lending proposal. Microphone 4 again.
Chairman, I would like to introduce Mr. Rob Farrago, who is a shareholder of the bank.
Actually, I'm a proxy for Ms. Alina Seligman. Chair, last year you said the bank's exposure to the coal sector was declining and would continue over time. These are encouraging words, but a year on, there is still nothing in our policy or position statements that reflect this sentiment. How is it that the Commonwealth Bank remains the only one of the Big Four to lack a policy on limiting investor exposure to the coal sector, given its massive contribution to climate change?
I think we've said that in the context of supporting the transition through a low-carbon economy and to a net zero emissions, we will be reducing our coal exposure over time. And that is our commitment to the transition policy that we have. Microphone 1.
Chairman, I would like to introduce Carolyn Tomzo, who is a shareholder.
Actually, I'm a proxy for a lot of shares that a 17-year-old boy has had them purchased by his grandfather. They are victims of Commonwealth Bank. This 17-year-old boy doesn't have a voice in what has gone on. And so today I'd just like to ask a question in regard to the long-term variable reward and the performance measures that Mr. Common has to achieve to actually get that long-term variable remuneration. The first is total shareholder return. The Royal Commission has pointed out that focusing on shareholder return over and above everything else, particularly customers, has led to the situation that the bank has found itself in recently this year. Has the board given any consideration to actually putting customer focus into that criteria instead of 75% of that performance measure going back to shareholder return? It's a double-edged sword for this 17-year-old boy because he gets a dividend as a shareholder, but he also has suffered at the hands of the bank where he's actually been evicted once from his family home and threatened to be evicted again.
Thank you, Ms Thompson. If I can just come to the second part of your question in terms of any customer issues, while this is a shareholder AGM and we don't discuss the privacy of individual customer issues, can I really urge you to take the matter up with customer representatives who are here today so that we can look into those particular issues. On the question of the long-term variable remuneration, but that has to be coupled with the criteria in the short-term variable remuneration, which does absolutely have a focus on customers. And our view is that unless that focus on customers is there, and we've done a great deal this year to make sure that we've reoriented our remuneration, our processes, our purpose, our values, to get that short-term focus absolutely on customers, we then believe that that will translate to longer-term shareholder value. But I'd also say in the long-term criteria, there is trust and reputation, and there is employee engagement. And again, we think they're important criteria for the long-term interests of customers coupled with shareholders. So I would just reinforce the point that the criteria in our variable remuneration are very orientated towards customer outcomes and thereby delivering shareholder outcomes. Thank you. Microphone 2.
Chairman, I would like to introduce Mr. Peter Dart, acting as proxy for the Sisolka family, who are shareholders.
Thank you. The 2018 annual report clearly identifies climate change as a material business risk, as you've said. What has the board done specifically to educate itself on climate risk in the last year?
Well, Mr Dart, as we said last year, we were planning to adopt the Task Force on Climate-Related Financial Disclosures framework, which covers governance, the strategy, the risk management, and also reporting of indicators. So the board, in the first instance, had presentation and education from an expert from the UK to make sure that we understood exactly what that was. And then we've had presentations from executives who've been involved in undertaking the scenario analysis, which is covered in great detail, as you would know, in the annual report, going across all of our portfolios, and what the implications of that scenario analysis is for our various customers and for our products.
Is the board satisfied that all potential material climate-related risks to our performance and prospects have either been appropriately disclosed or resolved as not material?
I think we've disclosed the extent of the climate risk challenge, and as you say, it's a material business risk. We've undertaken the scenario analysis so that we can better understand at a more detailed level what the implications are, and that's covered in our annual report. The climate risks fall into the physical and also the transition risks. So we're actually focusing on the physical risks in terms of our lending portfolio and homeowners and property owners. And then on the transition risks, of course, you have the regulatory, and we can't predict the regulatory outcomes, but we're very alert to regulatory risks. There are technology aspects to the transition risk. There are market aspects, and there are reputation aspects. So we've disclosed that we're very alert to those elements of the risk profile when you sort of drill down into what climate risk actually means. And as we've said, in 2019, we're going to take particular aspects of that and look into it. So, for example, we're going to look at the portfolio in terms of our agricultural lending and making sure that we work with customers there for them to understand how climate risk might affect their business.
And has the board per se been educated in climate risk? You mentioned education in the bank as a whole, but has the board itself had access?
No, the board has had very specifically, we have had a dedicated session to understand the TCFD framework, which helps us actually to get into how you actually manage climate risk. It's one thing to say there's climate risk, but then what do you do?
Sure.
And that's where the TCFD framework really helps.
Thank you very much.
Thank you. Thanks, Mr. Dart. Microphone 2 again.
Chairman, I would like to introduce Mr. Barry Cosgrove, who is a shareholder.
Good morning. I'm a shareholder, not an accountant, and my questions relate to understanding the financial report. I have a question which is really in two parts. Pages 67 to 7 of the annual report provide for the performance overview, and that is broken down into the 7 business groups, starting at retail banking, which has a 56.2% of the group profit, down to the smallest being international financial services of 1.9%. Now, I'm not an accountant, as I've said, but when I added up the various percentages of the business groups, it comes to 114.7%. And I have some difficulty understanding how there can be more than 100% profit. Related to that is when one adds up the cash net profit after tax amounts against each of those, we come to the figure of $10,599,000,000. But at page 62, the cash net profit after tax is shown as $9,233 million, which is about a $1.3 billion difference. As I say, I'm not an accountant. There's probably a very simple explanation for that, but I have trouble understanding.
So I think there are probably, and without having gone through exactly what you've just run through now, but I think there are probably adjustments at the group level. So if you add up the individual units, you will come to a number greater than the group because we have expenses at the group level. But I might get our CFO, Alan Docherty, to respond in detail.
Yes, that's correct, Catherine. So we have a corporate centre, which includes unallocated head office costs or group treasury operations, and also that corporate centre bore the Austrac settlement, which was a significant sum, obviously, in the current financial year. So if you add the sum of the operating businesses, you're going to aggregate to higher than the reported cash profit number. So you need to add the corporate centre, which we disclose in the profit announcement on page 83.
Okay, thank you, Mr Cosgrove. Microphone 1, please.
Chairman, I would like to introduce Mr Lee Keelton, who is a shareholder.
Thank you, Chairman. I'm also an investor in my private capacity as well as through my self-managed super fund. So I share the pain of the previous speaker who was talking about dividends, and particularly in view of losing potential refunds of franking credits next year. But Chairman, my main concern as an investor is looking at a company that has growth and dividend potential. In the past, the Commonwealth Bank, which is Australia's #1 market cap company on the ASX, has ticked all those boxes for me. And I guess each year I have relied on the board to produce the sort of framework and governance and direction that this company should enjoy. This is not the first year this company has existed, and listening to some of the comments on lessons we should learn makes me wonder what has been going on in the past that we now have to learn these lessons. I did note Mr Commons' comment that he is now engaged a new team with deep skills and experience. And I have to wonder what happened in the past. Did we not have deep skills and experience that you as a board oversaw in those earlier days? I'll try to reduce my comments, Chair, but I am somewhat horrified and appalled by what has happened over the last two odd years, I guess. You did tender your apologies to shareholders, and rightly so, but you also say in your report that we take full responsibility for the issues we have faced. I'm just not sure what taking full responsibility in this context actually means. I'm not sure that we should be relying on the regulators to bring about the changes that the board are now embracing. We've had Austrac, we've had APRA, we've had ASIC, and now we have the Royal Commission. But every year at AGMs, we as shareholders are told the need to pay extraordinary amounts of money to the board and senior executives of this company to attract the right calibre to lead us into the future. You know, that is something that is just handed to us as a fait accompli. We have very little control over what you are doing there, and also how much time and energy each of the board members puts into running this company and taking it seriously. I'd use as an example, and just bear with me if you may, the Risk Committee. All of this that we have been through surely is the domain of the Risk Committee, which has had the same chair for at least a couple of years who's non-resident, but that may not make any difference. But the Risk Committee is supposed to look at compliance issues as well. Now, there are few compliance issues that would carry the sort of penalties that Austrac have raised. I cannot believe that those go under your radar if you're taking this position seriously. That 18 million per transaction discretion, or whatever it is not something that you should be totally focused on in your committee. And the board as a whole also, you say, take responsibility for the risks. So what has been going on that we've had a risk committee and a board that have not even known what's going on, that have caused us as shareholders to now lose the equivalent of $700 million after tax. $700 million after tax is what many top ASX companies aspire to make in an entire year. You have a director who is the chairman of Gatwick Airports in the UK's second largest airport. They don't even make $700 million in a year, so he would be very well aware of the significance. And I believe he probably sits on that committee as well. So, Chairman, what I would like to suggest, if you don't mind, is that maybe if we are consulting with shareholders, that maybe part of the new governance should be that shareholders are represented in an advisory capacity or in any other observer capacity, if you like,
on the Nominations Committee, because clearly we are not consulted at all as to who the directors are going to be and who the chief executive is going to be. I realise that you don't want to consult with all of shareholders on every decision, but at the moment, I think this board is thoroughly disgraced by what has happened. I would like to see shareholder representation on the Nomination Committee appointed for at least 2 years, perhaps from the retail sector and also from the non-retail shareholder sector, so that we can at least be satisfied on the transparency of process in appointing directors and assessing their ability to serve this board properly and have the time to do that and also the qualifications to do it. If I look at your matrix on the board capabilities, risk is one of the items, risk experience. You get 10 out of 10 for that. Now, I don't understand how you get 10 out of 10 people that actually have focused on risk. You have directors who are resident overseas that may well bring all sorts of other experiences which we need. But we have other directors that sit on multiple boards, and sadly that includes you, but you are all earning a significant amount of money. If you are truly remorseful about this, then perhaps you should forego all of your directors' fees, not a token 20% of them, for the time that you've been in office. I would ask you, though, in my final submission, that you consider having shareholder representation in your nomination committee. Thank you.
Thank you, Mr. Kilton. So we do take responsibility for what has happened. I think between myself and Matt, what has happened is totally unacceptable, and whether we were here or not at the time, we have to take responsibility. We had failures of process, we had failures of policy, we had failures of capability. So we don't resile from that. We don't resile from anything that the Royal Commission has identified, and the APRA Prudential Inquiry, which, as we've said, is fair and constructive, was itself very confronting reading for us. But we are determined to address these issues. In terms of your point on accountability and remuneration, as I've said, we did take steps in exercising board discretion, and executives and former executives, so people who've left, were included in the $100 million of decreased remuneration. So remuneration which was deferred was forfeited, and current remuneration was adjusted downwards, and in several cases to zero. So I think in terms of responsibility, I think we're very clear that we do take responsibility. There are a lot of changes underway and have been underway for 2 years now. We're not waiting for APRA or the Royal Commission to highlight the issues. We were aware of many of the issues, and as you know, we started changing our remuneration framework in the first half of calendar 2017. And that then led to an ongoing process of change. In terms of the Risk Committee, we do, I would say, the Shirish Apt is the current chair. He came into the chair in 2015, and he is an extremely diligent chair, notwithstanding that he's a resident overseas. He spends more time in Australia than you might imagine. In terms of the AUSTRAC and the anti-money laundering issues, we were addressing those issues. We had spent, at the time of the AUSTRAC proceedings, we had spent over $250 million in improving our anti-money laundering processes, including KYC centres, transaction monitoring, upgrading of people. But in the event, AUSTRAC lodged proceedings and we entered into court mediation as required. We agree that the $700 million is a very large sum of money, and it is unacceptable that our processes led to that outcome. but we're determined and are investing an enormous amount of time, money, thought into making sure that we develop systemic solutions to the systemic problems. But thank you for your comments. In terms of your suggestion on directors, we do actually have a rigorous process in terms of looking for directors. We employ search firms to identify possible directors, and we identify the skills that we're looking for. So in the directors that, so Anne Templeman-Jones, who's up for election today, and then Paul O'Malley will be up for election at the next meeting. Both of those bring to the board, and will bring in Paul's case, very important skills as part of this process that we're going through to build this better and simpler bank. Microphone 1 again.
Chairman, I would like to introduce Helen Beasley, who is a shareholder.
Does the board believe it has a responsibility to inform property owners and purchasers of the risks of climate impacts and how they may affect their property's valuation over time? If so, how will the bank do that?
Well, thank you, Ms Beasley. As I said, having done the scenario analysis in this year, our objective then for the next year is actually to understand how best we can do that, both for the residential but also for the agricultural lending. So that is actually our next project in managing our climate risk and working with our customers to make sure that they can manage the impact on them. Microphone 1 again.
Chairman, I would like to introduce Mike Cribben, who is a shareholder.
Hi. There's been quite a few questions today where the subject's been climate change, and you've indicated that the bank's taking an interest in the future effects. What I would like to raise with you is that you stick to the facts, because some of the claims that have been made, particularly in regard to the rise of the sea level, which is supposedly going to flood all these properties, is in fact quite erroneous. And I can prove it by reference to facts. And that is, you have every harbour around the world a thing called a tidal gauge, which measures the high tide and the low tide. And the difference between the high tide and the low tide is the mean tide. And if you keep track of what the means have been, you find that in fact there's been very, very little increase, marginal. And in fact, in 100 years, when the gentleman who started worried, it'll be at the most 1 foot in the old days. I'm not into the centimetres and millimetres of what that is, but it certainly won't be the 1 to 2 metres that the doomsdayers have said. So I would like you to concentrate on the facts and not be diverted by scaring things that some people pay, because, it's fairly important to keep the value of the funds for shareholders, and I would hate to have a decision made which isn't really scientific. So I would like the bank to maybe examine, and I'm quite sure, but you will find that in fact there's been marginal, just a few millimetres increase in the last 20 years, when supposedly the temperatures have risen, the ice has melted on the glaciers and the ice blocks, ice caps, but amazingly the sea hasn't risen. Why? I wonder why. Yeah, it's an interesting question, but let's stick to the facts. Now, my second question relates to the sale or not of the wealth. I can't understand, if you're going to have a simpler, better bank, why you don't get rid of the last bit of rubbish that you've got in the wealth and mortgage area, which has been causing the problems. Why are we retaining it? I haven't really understood that. I would much prefer not to be sent some note to say you now have X thousand shares in the new Newco or whatever it's called. I'd prefer to have something that says I've sold it for $1 billion or whatever it's worth. I don't know. So they're my two interests. But certainly, if you can have on the climate change, don't get scared on this rising sea levels. It's been very, very overrated. Thank you.
Thank you. Thank you. Thank you, Mr. Cribben. And I would say that in terms of the way that we manage the climate risk and through the scenario analysis is to do exactly that, to make sure that we're keeping an eye on the facts as information emerges or analysis emerges. So we're looking at multiple scenarios, and as the facts emerge, then we can update the scenarios. So I can assure you that we're not working on opinion, we're working on facts. In terms of our demerger of the wealth and broking businesses, yes, we have announced that we plan to demerge those businesses into what we're calling NewCo, and that will happen towards the end of next calendar year, and shareholders will receive shares in that new business proportionate to their holding in the Commonwealth Bank, and then shareholders can decide what they would like to do with those shares. But we will obviously have much more to say about that. As Matt indicated, we've announced a CEO of that business who will be starting soon, and we will keep shareholders updated on the progress of that demerger. Microphone 2.
Chairman, I would like to introduce Ms Jan McNichol as proxy for Colin and Maxine Edwards, who are shareholders.
Thank you, Madam Chair. I was pleased to read our bank state in a CommBank Spotlight article this year that we are committed to playing our part in limiting climate change to well below 2 degrees in line with the Paris Agreement. So it struck me as odd that in May we loaned $235 million for the development and construction of Corpus Christi, a liquefied natural gas facility that would enable the release of carbon dioxide emissions equivalent to 1.5 times Australia's entire CO2 output in 2017. Can you please explain to shareholders the rationale behind continuing to finance the expansion of the fossil fuel industry when this is so clearly inconsistent with the goals of the Paris Agreement? In answering this question, please note that I'm not asking the bank to comment on details of specific projects or deals.
Thank you, Ms McNichol. I think in terms of our policy, what we have said, and I mentioned in my address, that we regard gas as a transition fuel. So in terms of supporting gas, that is a transition away from coal and ultimately towards a lower and then low carbon economy. But I think we will see there are some quite interesting developments on technology generally, and I think we will see a faster transition than we actually expect at the moment. So I'm very encouraged by some of the early stage technologies that are coming through. But gas is part of the transition.
Thank you.
Thank you.
A September report by Carbon Tracker, highlighted in the Australian Financial Review, singles out the LNG industry as particularly vulnerable to stranded asset risk, given that it's a sector at the top of the cost curve. How did CommBank satisfy itself that the additional capacity it financed at Corpus Christi LNG plant is required in the well below 2 degrees climate scenario that our bank claims to support?
Well, I think if you look at the timeframes of those projects of that nature, they will actually go through their life cycle within the period to 2050, and we take that into account when we're looking through our ESG criteria to understand whether there will be a stranded asset. But as I've said, in terms of our scenario analysis that we've done, we are now much more well-informed, much better informed on the concept of stranded assets and the time frame within which they may in fact become stranded, and that will inform our lending going forward.
Thank you.
Thank you. Microphone 1.
Chairman, I would like to introduce Mr Selwyn Krepp, who is a shareholder.
Good morning, Madam Chairman. I've travelled to Melbourne today to specifically meet with you one-on-one. I welcome the opportunity to present my questions. whilst I'm a shareholder, I realise this is a shareholder meeting, I'm also a victim, and I want to pay compliment to Matt Common, who has actually personally met with me, and our discussions are ongoing. Thank you, Matt. I look forward to hearing from you very soon. Okay, back to you, Lady Chairman. I'd like to know, or get you to explain to me, what is the board's methodology in the receiving of complaints, both at being recorded, processed and resolved? And the reason I ask is I don't wish to blame Aussie Post, but I've actually got a document here that I want to present to you, which is a copy of all my express delivery post correspondence to you in person, and in your reply I'd like to see action and not lip service.
Well, Mr. Crepp, I think, as Matt pointed out in his address, and I can confirm from the board's perspective, that the whole process around complaints has been a key area of focus, and in fact has been an area of focus since I came into the chair, to understand what the process is and to understand how we respond to customers, but also how we learn from that process what are the systemic issues that the process reveals. So rather than fixing issues that relate to one individual customer, how can we understand better what might be affecting many customers? Matt has elevated the importance of managing customer complaints, and as he said, the Deputy CEO, David Cohen, will now be overseeing that whole area. So it could not be receiving more attention.
Firstly, I'd like you to acknowledge to me why you have not responded over the past 5 years to all my correspondence.
Well, I'll have to look into that, Mr. Crepp. I've only been in my role for 2 years, so I'll look at what I should have responded to in that time. But if I can get those details from you, I'll investigate.
I would welcome that. I'd like to think that I could give it to you in front of press so I can get a photo, so I can show my colleagues, family and friends back in Melbourne. At the same time, if you've got any of your staff here from CommInsure, particularly the MD, Ms Helen Troop, if she's available, I have similar to present to her.
All right, thank you. Well, as you say, we'll have a moment after the meeting to get together.
My pleasure.
Thank you very much, Mr. Crepp. Microphone 1.
Chairman, I would like to introduce Mr. Kaji D'Souza, who is a shareholder.
Yeah, thank you very much. I've been a shareholder since the first float. Before I comment on some of the adverse implications of the domination of the major banks, which led to the malpractice, I would like to just state that we have one of the strongest banking systems in the world, and this was clearly demonstrated at the time of the financial crisis, where banks around the world, except Canada and Australia, collapsed and had to be bailed out by shareholders. Now, coming back to the domination of the major banks, I'll go back to the 1980s, and I have been in the building society and regional banking sector since the mid-1970s. At that time, there were 7 major banks in Australia. And what prompted the change of that and led to some mergers was a recommendation from the Campbell report, which sought to invite 4 foreign banks to enter the financial system to improve the competition. As it happened, that didn't occur, and some licenses were issued to some of the foreign banks who haven't existed since and have given back their banking licenses. But what happened with those, as soon as that announcement was made, there was a rush of mergers amongst the 7 banks, which led to the 4 banks now. Westpac was formed, and the NAB was formed. ANZ missed out on those mergers, and the Commonwealth Bank was in public ownership. Thereafter, as I said, they dominated. At that stage, there were, besides the 4 major banks, there were several building societies and finance companies that improved the competition in the banking sector. Over the next few years, the 4 major banks took over the majority of those large regional banks, which were formerly building societies, and then they took over the major wealth management companies, the major broking companies, and the major financial planning companies. They had total domination of the financial system. They dominated government policy. They dominated and bullied the regulators, which led to the malpractice that has occurred. It seems to me that we need a strong banking system, and I think it behoves all the banks to get and obtain the trust of the business sector and the community to regain our domination, because if not, we will suffer the consequences and most probably go into recession, and we'll lose the momentum that's been built up over 27 years with strong growth, strong profits, and the bank's strong profits have been excellent. But unfortunately, the strong profits led to malpractice, domination of commissions, executive remuneration, and the shareholders of all the banks have got well rewarded over the years, but we need to recover the position to maintain a sustainable banking system going forward. Thank you.
So, Mr. D'Souza, I can only endorse everything that you have said. We need a competitive sector, but we need a very strong sector for the Australian economy. And the financial services sector is just crucial because of the degree of wholesale funding from overseas that we need to keep the economy going. So at Commonwealth Bank, as Matt and I have both said, we are so focused on making sure that this is a simpler, better bank, because that means it'll be a stronger bank. But thank you very much for your comments.
Thank you.
Microphone 1.
Chairman, I would like to introduce Craig Caulfield, who is a proxy for his daughter Olivia Caulfield, who is a shareholder.
Oh, hello, Chair and the Board. Unfortunately, I'm here today because I've had a dispute with the Commonwealth Bank for 9 years. I've had 23 senior managers and executives look in and investigate my dispute. I'm getting no satisfaction whatsoever over all of that time. In 2010, I asked for financial hardship and the bank refused. In 2013, my wife and I struggled, but we offered to pay the arrears we had on our loan, and the Commonwealth Bank refused. On the same day, we offered ANZ, who accepted that, and we've kept good on that loan to this day. Dealing with 23 different senior managers at every level, including recently up to Mr. Common, it's simply a failure, and there's a disconnection between the board and the management and what's going on. I hear all these good news things that you're saying, but it's not getting through. I've written to the board and I've written to you, Ms. Livingston, in 2016. You may be aware of my case. And I didn't get a reply. It was sent back to Mr. Narev and his team, and it was a total failure. My loan documentation has 27 items of fraud. My signatures have been cut and pasted. The current customer advocate who is dealing with it said yes, they would get a forensic document examiner involved. Now, for two or 3 months now, since I said I need to be involved in that process, which is part of the requirements, they've been silent on that. I mean, when is our 9-year nightmare going to end? When Mr. Common has referred me over to the customer advocate, that's not working for me. It's not working for me with Mr. Common if he's not going to meet with me. So I would like to meet with you, Ms. Livingston. I want you to look at my case, but you need to be looking at cases like mine, the whole board does, to get an understanding at the coalface, because everything is showing that it's not working. For example, Speak Up. In April 2016, Mr. Cohen said to a parliamentary inquiry that Speak Up is an independent view of investigating fraud. Well, it's far from that. I've got extensive notes on it, and what Speak Up does is pick up a plastic telephone receiver where the telephone is plugged into their office and they refer it straight back to the CBA.
So, Mr. Caulfield, I'm obviously very sorry to hear about your circumstances, and yes, I am aware of your case. As I've said before, AGM is not the appropriate forum in which to discuss private matters, but I know that Matt has been aware of your case, and there will be an opportunity to meet. But Matt, I don't know whether you want to comment.
Yeah, I'll just add to that. Thank you, Chair. Mr. Caulfield, I am very well aware of your particular case and recognise the long-standing nature of the matter. As you said, it's currently with the customer advocate, and there's members from that team here today. I'm very happy also to meet you in person after the conclusion of the meeting. I can assure you that the review that's being done by the customer advocate team will be reviewed by myself personally in matters such as yours, which are of long-standing nature and quite serious, as you've outlined. They're also the sorts of issues that I regularly update the Chair on. And I can assure you that over the coming weeks, we will come to certainly a final position from the bank's perspective. Clearly, I hope that that's going to be satisfactory to you as well. But as the Chair said, it's probably not the best time in front of everyone to go through all the specifics of the case, but I'm very happy to meet with you after the AGM.
Okay, thank you. And failing any agreement, will you agree that a forensic document examination will be done in a proper manner and not just conducted by the CBA, where I'm involved?
Mr Caulfield, I think the CEO has given you the undertaking that the appropriate processes will be followed to resolve the situation between you and the bank in a way that's as fair as it can be to both the bank and to you. So again, perhaps after the AGM,
okay, thank you.
Pick it up. Thank you.
Just a final suggestion: when you have these panels that look at, improving things, having a shareholder, having an angry customer on board is not a bad thing to actually learn where the problems are. You'll identify them much quicker.
Yep.
Thank you.
Good. Thank you. Microphone 1 again.
Chairman, I would like to introduce Graham O'Brien, who is a shareholder.
Good morning. We are often told, usually by someone with a vested interest, that if you pay peanuts, you get monkeys. Well, I'll tell you what you get for $12 million a year. You get greed, you get self-interest, you get incompetence, you get a lack of integrity, which leads to the disastrous situation that the Commonwealth Bank is now experiencing, with big payouts of millions of dollars for penalties and paybacks. Now, I think there's probably more to come on that, in that direction also. You also get the disastrous situation of the devaluation of the shares in the company. When you take all this into consideration, I've got to say, I think monkeys aren't a bad option.
Thank you, Mr O'Brien. And again, the Royal Commission has certainly revealed cases where the interests of customers came second to profitability, and we've said that that's absolutely unacceptable. In terms of the remuneration consequences, we have actually delivered those consequences more materially at the senior level, and you would see that the current and former CEO received 0 short-term variable remuneration this year, and there was extensive forfeiting of deferred remuneration by both the former CEO and other former executives in the millions of dollars. So we do feel that through the remuneration system there have been consequences. Clearly it would be far better if there didn't have to be consequences, because actually we had the processes and policies working for customers in the bank, and that's what our focus is on now. But I would absolutely agree with your observations. In terms of the share price, the whole market's down, and that has compounded the fact that the financial services sector is down. We can't affect the market or the sector. What we can do is actually focus on the bank to get better performance, better accountability and better integrity. Microphone 2.
Chairman, I would like to introduce Mr Brian Smith, who is a shareholder.
Thank you, Madam Chair. My question relates to guidance. With the banks, including the Commonwealth, under sustained and multifaceted pressure and attacks from the federal government, the federal opposition, soon to be the government, I expect, the ACCC, ASIC, APRA, AUSTRAC, the Hayne Royal Commission, with whom I know Mr Common has an upcoming appointment, Senate and House of Representatives standing committees, class action lawsuits, angry customers and a sometimes critical media, how much more bad news and pressure can the Commonwealth stand before there's even more impact on its reputation and on the confidence and value of shareholders? Thank you.
Well, Mr. Smith, if we take that in two parts, how much more can the people in the Commonwealth Bank stand in terms of all of these issues? And I think I've said that from the board, senior management, the whole organisation, we are absolutely resolute in our determination to address the issues and, as I've said, make sure there are systemic, not tick-the-box solutions to systemic issues. So we can stand whatever it takes to get this bank where it needs to be. In terms of the financial performance, I think as Matt outlined this morning, and you'll see our first quarter result, those results are resilient and show solid performance, including credit quality, growth in deposits, the strength of the balance sheet. And at this point, we feel that focusing on that performance and not being distracted by other issues, and that's why we're simplifying the bank. And we have gone through the divestments, which, by the way, are actually very beneficial for shareholders. So we're focusing the performance, the underlying performance of the bank is solid, the balance sheet's strong, so that gives us a very good platform for doing what we have to do to get the bank to where it needs to be in terms of its underlying process and policy performance.
Thank you very much.
Thank you. Microphone 1.
Chairman, I would like to introduce Vivian Tolliday, who is a shareholder.
Oh, sorry, it's a bit high. Can you lower it down a bit? Vivian Tolliday, first female cadet in the history of the Commonwealth Bank. I'm very happy to be here as a shareholder. Also wonderful that we have a female chairman. May there be more. I must say to you, the optics of this meeting are not good. To have a phalanx of advisors preventing anybody getting closer to you is not a good look. To have a setup whereby we can hardly see what you look like, let alone what clothes you are wearing, is not a good look. We should have seen all of you, not just part of your head. Not a good look. For a meeting that began with a lot of mea culpas, which are great, but maybe not enough to satisfy the meeting. My question now, you can't legislate a change of culture. The findings of the Royal Commission were particularly critical of CBA's existing leadership culture, yet there has been insignificant change at the very top. You, Madam Chairman, you, Matt Coman, are still there. Why?
Well, thank you, Ms. Tolliday. So if I come back to culture and what we're doing about culture. As Matt said, one of the first things that we've done in terms of remuneration is actually change the remuneration of our frontline staff so that it's no longer incentivised on sales but on service and customer outcomes. We have made it clear for our people what's expected of them in terms of the purpose, and we've restated our values so that they are also very clear in terms of the actions and the outcomes that are required. We've updated our code of conduct, and the code of conduct draws on the purpose and the values, but also very clearly poses the question, the should we question rather than the can we question, and gives people clarity on the process that they need to use if they want to speak up because they don't feel comfortable with what they're being faced with or what they're observing. We have to make it also easier for our people to do their job. So we are doing a top-to-bottom review of our policies. Our policies were too long, too complex, and hard for people to understand and therefore comply with. We're going through our processes. So as part of our response to the APRA report, we are looking at many of our core processes and completely re-architecting them, not just doing the quick fix, but going to root cause and re-architecting. And we're spending, and we have spent this year, $1.3 billion, in fact, on improving our systems to make sure that our systems are integrated. On top of that, we have on the management side and governance, Matt has introduced a completely different rhythm for the senior team, including bringing in far more vigilance on what are called non-financial risks, which are the risks which have actually led to all of the issues. And at the board level, we've changed our governance as well across the board and committees and are far more challenging of management in the context of don't just tell me, we want them to show what in terms of evidence that they're putting before the board. Many people here were not in the bank when the issues happened. The issues that come from the Royal Commission in some cases date back to 2014. What everyone here is committed to doing is to resolving the issues and making sure that at the very fundamental engine room of the bank, we have something that we can all be proud of and which will deliver the appropriate customer outcomes, which then in turn will deliver the shareholder outcomes. So I hope that gives you some assurance. And in terms of the board, we actually previously had the board sitting down below in the audience, and that didn't seem very good either. But we will have an opportunity to talk to shareholders after the meeting, so then you can see what everyone looks like and what they're wearing and have a chat to them.
I'm sorry, but you've said to us what is being done by management to change the incentives that all your staff are getting. But I've always been taught, and I went to a management school that said the fish stinks from the head. And really, there has been no change in the head. These things might have happened before your time. But I think, regrettably, from a symbolism and optics point of view, the people at the top need to also change.
Well, I think
having said that, please, if I may just say my last sentence. Having said that, I have faith in your bank because I was trained in it as a graduate trainee. I also believe, it used to be called the Commonwealth Training Bank. The reputation was fabulous in those days, and I really want to hear again that the Commonwealth is going to be the Commonwealth Training Bank, whereby all the great things that are happening in the financial world used to arise from the Commonwealth Bank. And I'm just really devastated to see the state of affairs where your reputation has so been trashed. And I guess my point is, how can that reputation change when the people at the top basically have not changed? I guess that's my point. I'm not casting any aspersions on your abilities as a chairman, Catherine Livingstone, none at all.
No. And Ms. Holliday, I'd say that, again, if you look at the board renewal that we have undertaken, there has been significant renewal. And in fact, when we get to January next year, the average tenure of directors on the Commonwealth Bank board will only be 2.5 years. And that, for me, raises a different concern, which is the loss of corporate memory. And we also have very significant change at the executive leadership team. And as Matt said, there has been, I think, 7 new appointments. I mean, it's very extensive change, including external appointments. So I hope that gives you some reassurance that there has been a great deal of change at the top. And we are very aware of the leadership that has to come from both the board and the senior management team if we're to change the culture of the Commonwealth Bank.
Thank you.
Microphone 3, please.
Chairman, I would like to introduce Vicky Sweetser, who is a shareholder.
Good morning. Thank you for the opportunity of speaking to you. This morning, many mistakes by the bank have been identified. Have the employees at all levels responsible for making these decisions had their employment terminated?
Thank you, Ms. Sweetser. So consequences take different forms. Where there is misconduct, willful misconduct, dishonesty, absolutely, people are terminated, and there have been up to 50, just below 50 terminations this year. There are other examples where the appropriate consequence is a warning letter, or it could be a change of role, demotion, or it could be reduced remuneration. And we have that range of consequences, and I can assure you there have been extensive consequences, and the remuneration consequences have actually affected everyone in the organisation in that $100 million that I referred to. But there's no question that there's immediate termination if there's willful misconduct. Microphone 3 again.
Chairman, I would like to introduce Tony D. Donato, who is a shareholder.
Thank you, Madam Chair. I'm a bank victim as well, 7 years, and paradoxically, the last 7 days I've become a bank shareholder to be here. My question's to Mr. Matt Common. Given the widespread conduct that has fallen short of community expectation, including the allegations of unconscionable misconduct, not only in CBA, but also in CommInsure, where does the accountability and responsibility for the culture, behaviours and actions that have led to the damning revelations in the Hayne Royal Commission ultimately sit? In reference to CommInsure, does it sit with the CommInsure Board of Directors, or does it sit with you and this Board of Directors?
Thank you, Mr. Di Donato. I think, as I've said right at the beginning, the overall responsibility for what has happened obviously sits with the board, and Matt Common is a director on the board, but also sits with the executive leadership team. We are ultimately responsible for what happens at the bank. In terms of those issues that you note, as you know, actions have been taken to compensate customers and, in fact, in CommInsure, to change the trauma and heart attack definitions that were the cause of the CommInsure issue more broadly. But we take full responsibility. To the extent that there's accountability through the organisation, again, as I've described, that takes various forms, including in remuneration.
In reference to the selling of CommInsure, what will happen with victims like myself moving forward? Who will I be dealing with? Commonwealth Bank?
Yes, I mean, as we've said, in terms of individual customer issues, this is not the forum to discuss them. We can discuss them afterwards. But absolutely, in terms of products that have been sold by the Commonwealth Bank retains responsibility.
Thank you.
Thank you. Microphone 1.
Chairman, I would like to introduce Paul Fanning, who is a shareholder.
Thank you, Catherine, and thank you, Matt, for your addresses. And I've been coming to a large number of CBA AGMs, and I am a foundation shareholder dating back through the first, second and third tranches of CBA, probably before a time of most of the board members. My questions relate, and Catherine, I see you have been answering probably 90% of the questions. I think some of these ones now are going to, a couple swing to probably be operational, and Matt, I would probably also appreciate you answering via the chair as fit. Today, there was a quarterly trading update released to market, and Catherine, I think you suggested, well, yeah, you indicated that the report was quite good, and it is quite good from what I see, the early trading in the, on the ASX. A couple of systemic things coming out of that. One, business banking. Key volumes on loans in the quarter, a negative 4.2%. I don't know why that is. That's probably not very good in business banking, and I assume that includes like SMEs. Is it a reflection of the economy, reflection of the property market? What is it? Okay, moving on. In your set one ratios, common equity tier 1 ratios, with the divesting of global asset management, there will be a large windfall there. Your set 1 ratio will rise to 11.2%. How are you going to manage the capital allocation in the future? I think Catherine and Matt, it's probably probably very beneficial for you to be able to say something positively. That one of the other large ASX 20 companies has actually taken the initiative and they've done something about it. Now, I know the Commonwealth Bank, and I've been a loyal shareholder since tier one of the IPO. However, I really would like to see something tangible, something positive, because we're getting a lot of negativity coming through in this meeting. I'm trying to give you a bit of a balanced view, but we really want to see something there, and I'm sure you know the other companies concerned have made recent announcements. Now, okay, so they're from the trading update today. I close that up. Now I go to page 68 of the annual report. Institutional banking and markets. This division has not performed overly well in the last couple of years. If I recall correctly, I think I may have even asked a question or two from the floor about the performance of institutional banking. NPAT was down 14.5% for FY18 year. NIM actually decreased by 6 basis points, and operating expense to income ratio has worsened to 42.7 from 37.7. These are key operational issues that are raised both in relation to the annual report and also your quarterly trading update. Now, I would have thought probably some of the institutional shareholders and large shareholders would have been already onto investor relations this morning, probably asking what is really going on. Catherine and Matt, can you please explain?
So, Mr Fanning, I might respond to the capital management issue and then ask Matt to respond on the operational issues. Certainly we flagged on, in terms of our capital, that there will be a release of increase in CET1 when the divestments are completed, and they have not yet completed, as you know, we've just announced them, so the increase in capital doesn't crystallise until the transaction's complete. And we obviously make capital management decisions on actual capital, but we are just foreshadowing the impact that the divestments will have when they do complete. And as I said earlier in the meeting, we are very conscious of the importance of dividends and franking credits to our shareholders, and they inform our capital management decisions. But if I can just hand to Matt on the BPB and IB&M.
Yeah, of course. Nice to see you again, Mr Fanning.
Thank you.
Actually, the 2 points that you raised are interrelated. So your first point around business lending, that includes both lending to business customers, so SME, as well as institutional banking and markets customers as well. And so the predominance of the lack of balance growth that we announced in our quarterly is actually a very focused review of our institutional banking and markets lending exposures. Yep. And the institutional bank is obviously a very competitive market where we're also facing global competition. So at any individual point, we're making decisions based on the pricing that's available in the market and risk, cognizant of the returns, obviously, for our shareholders. So that's the main driver in the context of the business lending in our quarterly result. Now, specifically to just deal with the institutional banking and markets result for the full year ended 30 June, there's a few factors in particular which impacted that result. One, it also included a software impairment for our institutional lending system, which we called out at the full year results. The loan impairment expense was higher in the financial year in institutional bank, and you probably recall in the first half of last financial year that related to one single large name. But as you will see in the quarterly update, the level of loan impairment expense is actually very low in our corporate and institutional book. And the net interest margin is really a function of what I said, which is a lot of competition over that period. So I can assure you that both myself and Andrew Hinchliffe, who runs the institutional bank and markets team, it's a very important business in the context of the overall Commonwealth Bank group, where we are very focused on ensuring that we're delivering the right long-term risk-adjusted returns for our shareholders.
Catherine, just a supplementary point. Thank you, Matt. Thank you, Catherine, for your excellent responses. Going forward in the coming, for FY19 and maybe FY20, how can we, when do you think there will be actually positive, accretive increase in sector contribution from institutional after having, I believe, the last 3 previous years where it has been a diminishing return from the institutional?
Well, Mr Fanning, we don't make outlook statements like that, but I think Matt has given you, well, hopefully has given you confidence that the team is very focused on it.
Okay, thank you, Captain. Thank you, Captain. Thank you, Matt.
Thank you.
Microphone 3, please.
Chairman, I would like to introduce Wendy Streets, who is proxy for the Financial Sector Union.
Thank you. I'm the Queensland Secretary of the Finance Sector Union, and I'm here today proxy for our National Secretary. Our question, Chair, is in what ways will the board step up and improve its supervision of the executive leadership team to ensure that CBA is working towards good culture, and how will the board ensure that good cultural practices are permeating through all levels of CBA?
Thank you, Ms Streets. Well, I think, as I've said, we have actually evolved the board governance and the committee governance to strengthen it and strengthen the degree of challenge that we're making of management, and also having much closer inspection of the material that comes before the board and the committees. But most importantly, I think starting with the remuneration of our frontline people, and the fact that that is now very much orientated towards customer outcomes and not to sales outcomes. That's a very important change to our cultural signalling, if you like. The Code of Conduct, as you know, has been revised, or a new Code of Conduct, in fact, that links the purpose and the values, and that's being promulgated throughout the whole organisation. And I think you probably know that people are responding very well to the re-articulation of the purpose and the values, because it's then very clear what's expected of all of us. So I think they're the sort of grassroots level, quite apart from then the broader executive remuneration outcomes. And we do have variable pay for executives, and it's through that variable pay that we deliver consequences where that's appropriate. And in the past remuneration cycle, we also had the ability to reward very particular instances where there was good risk behaviour, exceptional risk behaviour, particularly in relation to customer outcomes. So it's through all of those individual signalling points and every day that we will actually evolve the culture to one that's focused on customers and obviously then delivering the shareholder outcomes. But a very important part too, as I've said before, is what we do with our policies, so it's easier for our people to use and much clearer what's expected, and how we make our processes much more fit for purpose so that people aren't having to work around them, because when you start working around policies and processes, that's when mistakes happen. So making a working environment that makes it much easier for people to do their job and focus on customer outcomes. Microphone 2.
Chairman, I would like to introduce Ms Denise O'Malley, who is a shareholder.
Madam Chair, I work in schools, and I tell you what, as a shareholder, I feel so proud when I see the bank's financial literacy program happening in schools. And I've been into a few classrooms and seen it happening. It's great. If we're honest with ourselves, though, there's probably a little bit of that about capturing the customer loyalty of these future young adults. And I'm okay with that in this era when people can change banks. But we're starting to see in the media just a little bit of comment about, oh, you know, it's a bad look for CBA doing this, or in some way they're taking advantage of little children. And I think the bank, you know, the last thing we need is more negative press saying we're taking advantage of little children. And I'm just wondering whether maybe we should combine with Westpac or something, and, you know, so that that kind of criticism can't be levelled at us. but we're genuinely doing something altruistic for the young people of this country, because financial literacy is so important.
Ms O'Malley, I couldn't agree more, and it's a very important program. I think it's about 300,000 students and nearly 4,000 schools are involved in the program, and financial literacy is becoming more and more crucial. But perhaps if I could ask Matt just to comment specifically on our program and on your question.
Yes, thank you for the question, Ms O'Malley, and I share your passion for financial literacy in Australia. As you mentioned, there's actually two elements in particular that the Commonwealth Bank is proud to be associated with. One is our dedicated financial literacy program, which is known as Start Smart, which we put through more than 500,000 students over the last year, which I think makes us the largest financial literacy program in the Southern Hemisphere. The second is our association with schools, which we've been involved with schools in Australia for more than 85 years. It's not an exclusive relationship, so actually it's open to any financial institution to offer that service. As the Chair mentioned, we provide that to almost 4,000 schools, and I think the ability for us to be able to help those students learn more about financial literacy, which also relies on the hard work of thousands of parents who actually administer the program on our behalf. It's something that we think is very important, and we'd certainly like to continue to be able to provide both of those services well into the future.
Great. Microphone 1.
Chairman, I would like to introduce Ron Gawthorne, who is a shareholder.
Madam Chair, Catherine, let me congratulate you on your temperament and patience this morning. I represent my own superannuation fund, and of course we're interested in seeing the value of our shares restored, and I think that hopefully will happen over the next 2 or 3 years as you toughen out the problems that we're currently having. My concern is in the skills that I've heard about this morning. Lending isn't terribly complicated. There are only 4 elements to lending. It doesn't matter whether it's a personal loan or $100 million. That's the ability for a client to be able to repay, stability, previous credit and equity. Now, my concern comes when my superannuation fund, which has taken a battering in its value but not in its income, is earning $200,000 a year tax-free. But if I was to walk into the Commonwealth Bank and ask for a loan, the problem is the value, or my income is assessed at 2.5% then of the value of those shares, which is then $50,000, irrespective of the fact that I'm earning $67,000 from the Commonwealth, and let alone the other banks. So there is a deficiency in the systems that we have. And I think that we need to, in looking at the systems that you're looking at the moment, before we throw away good business, I would ask, particularly Matt, to take into consideration the comments I just made, because we are throwing away good business and we're in a very competitive market and we can't afford to do that. So once again, I thank you for your patience and your time. Thank you.
Thank you, Mr Gawthorne. So Matt, would you like to comment on that?
Yes, thank you for the question. Look, we're bound by what are known as responsible lending guidelines, and we're certainly cognizant of not wanting to turn away good opportunities for us to lend money responsibly in Australia. Of course, it's incumbent on us to not only deliver good shareholder returns over the long term, but also to facilitate economic growth and ensure financial stability in Australia. Over the last 3 years, there have been changes to lending standards with the bank and with many other banks to basically ensure that the lending standards that are present at the moment, particularly with interest rates as low as they are prudent and will serve both the institution and the broader economy well. But I do recognise that for certain customers, whether it be investment income or other forms of income, that does receive a substantial haircut. It's one of the things that we certainly consistently turn our minds to make sure that we're making the best possible decisions, provided, of course, that we're compliant with our overarching responsible lending obligations.
Microphone 4.
Chairman, I would like to introduce Mr. Kaz Kazim, who is a shareholder.
Good morning. I wish they'd take the spotlight off. It's blinding and it's quite unnecessary. Anyway, look, I've been a customer far longer than I've been a shareholder. And I won't cover the grounds that's already been covered about the stench coming from the bank over the years. Not a very good feel for me because I've been a customer and a shareholder. And the bank's been throwing money to try and restore trust. And it appears that it's at the front and centre of all your expressed concerns. I have two simple questions. Mr. Morris raised these issues, serious governance issues. He was ridiculed at one time, I think it was in Adelaide when I first attended the AGM, that he was a disgruntled employee. Now, that director is no longer on the board, which is terrific news, but has Mr. Morris been issued an official apology for raising those issues? And the second question is, has any compensation been paid? Thank you.
So, Mr. Kazim, in terms of what you're referring to, in terms of effectively our whistleblower process, we have greatly strengthened that process in the last 18 months and made it far easier for people to access the process, and then we've strengthened the protocols at the board for our understanding exactly what complaints are being made through that process. So the board is much better informed and much more alert and much more questioning of what comes through the whistleblower process. I have personally met with Mr. Morris and expressed an apology for the way he was treated and listened to his concerns in terms of what he knew of the bank.
What about the second part of the question, which is essentially there are a lot of people who've had issues and they've been compensated in one way or another. Has Mr. Morris been compensated as a victim, as a genuine victim and a genuine employee who raised concerns of governance issues?
So
has he been compensated?
We don't discuss individual matters for individual whistleblowers in particular, so all I can say is that we have recognised that we didn't treat the whistleblowing that occurred at the time as we should have, and that would not occur now.
Okay.
Microphone 1.
Chairman, I would like to introduce Eunice Turner, who is a shareholder.
Ms Livingstone, board members, it came up today that they thought this shabby work had been going on for a couple of years. In my opinion, financial institutions haven't been doing their work to their best ability for about 20 years. And why do, when people are suffering hardship, financial institutions put the interest rates to unbelievable levels that they have to go bankrupt? Why? Now, you said you were going to make everything great. I want investors to be able to invest, domestic investors to act with impunity in their investment, also foreign investors, that every nation in the world will want to bank with Australian banks, our 4 big banks. I also have something more to say. Why have financial institutions been allowed to get away with this for so long?
Well, thank you, Ms Turner. I'll take your comments, and I think the responses that have been addressed at this meeting would indicate that we would agree with you in terms of the importance of very strong financial institutions, but also ones that are deserving of trust and confidence, and we acknowledge that Commonwealth Bank and the sector more broadly has not been so deserving in recent times, and it's our intention that we restore the perception of our trustworthiness and therefore the trust that you can have in us. Microphone 3. Well, I think actually at the moment interest rates are in terms of historical levels, very low. But if there are aspects of hardship, then we do offer financial support and special assistance to customers who are experiencing financial difficulties. Microphone 3.
Chairman, I would like to introduce Brian Tennant, who is a shareholder. Chairman, Brian is sitting approximately halfway up the auditorium on your far left.
My far left. Can we... Right.
Okay. Yeah. Primarily, I want to congratulate Matt for his letter of the 27th of September, and it's a very fine letter. And what I like about his letter, he outlines in the last paragraph that for a better Commonwealth Bank, will be better, but he goes on to say that it will never end. But the important thing is that my prime concern was to congratulate Matt for his fine letter, and also to support the final dividend. Which was my understanding was a bit of sacrifice by the board, and also what I do like about it is that Eastern Standard Time, within 1 hour of opening, I had my dividend in my bank account, and I was able to square my debts off and end up in the black. But anyway, the important thing is that the bank will have to learn more responsibility. You know, for example, there was an unemployed person. He wanted a new car. Mum and Dad had just paid their house off, and of course they put their house up, you know, as collateral, and of course they lost their house. Well, and now the Commonwealth Bank when they lend money, it'll be more responsible. In other words, the borrower will have to convince the bank that they're able to service that loan, otherwise they simply won't get the loan. And then, in other words, the bank will be legally right and morally right, whereas, you know, not only the Commonwealth but other banks, we're accepting those sort of deals. So, Matt, congratulations on your letter, and I thought myself that the final dividend was fantastic, and because all the mum and dad shareholders, all shareholders, appreciated it very much, and I look forward to a more prosperous bank, but more important, we have to win the respect of the man in the street, and Matt, I think you're doing a good job in that regard. Thank you.
Great. Thank you very much, Mr. Tennant, for your comments. Microphone 1. Please.
Chairman, I would like to introduce Stephen Weller, who is a shareholder.
Chairman, Mr. Coman, I wish I was here speaking on a more constructive matter, but having been through the Royal Commission and given evidence in the round 3 hearings, I wanted to put some focus on that particular round 3. Whilst I have my own issues, that's not really what I wanted to speak about, although I am in the process of engaging with Mr. Coman, pardon me, and awaiting responses on that front. What I am wanting to say is that we are a part of a fairly large group of people who have been through submissions to the Royal Commission, and I'm referring specifically to the round 3 hearings, of which I have the knowledge. These people have suffered losses in the tens of millions, hundreds of millions of dollars. And my question is simply that I would hope that the focus will be placed by the bank on those particular submissions that have been made to the Royal Commission that have been unheard. The Royal Commission heard 4 people in that round 3, and effectively it was within a legalistic framework. But I don't wish to talk any more about that. I just want to ask the question, what can we say from the bank about engaging with those people whose stories are part of the bank's history? They've made submissions to the Royal Commission, and how you will engage with them going forward.
Well, thank you, Mr. Weller. I think, as we've said, we are looking at customers on a case-by-case basis, and Matt has indicated the approach that he and his team are taking. So I don't know, Matt, whether you want to reiterate that.
Yes, I'm happy to. Nice to see you, Mr. Weller. I did appreciate the opportunity to speak with you over the phone and in person. Yep. And I have one final thing to go through before I respond to you again. Yep. And as you know, in your particular case, after reviewing the particular circumstances going back many years, myself personally, I was not entirely happy with the way you were treated during that process. And I reiterate that apology, and I won't go into all the details in front of everyone here. More broadly, look, I'd say 2 things. One, the Royal Commission and the Commissioner himself has made it very clear that he's certainly factored in all of the submissions, and he's had a large team working very hard to ensure that they are incorporated into the Royal Commission process. But that doesn't abdicate responsibility from the Commonwealth Bank's perspective. And so I have a team working very closely with me at the moment on the back of the letter that's been mentioned today. I did, as was referenced, received more than 10,000 responses. We've been able to reply to 7,500, so I still have some more to get through. I'm personally dealing with more than a dozen customers. Some of those I'm meeting with in one later today, and then others in coming weeks. So I certainly will do my best, and with the support of my leadership team and our Deputy CEO in particular, to review all of those particular circumstances. In many cases, they are very long-standing matters, and try to bring them to an appropriate and satisfactory end for all parties.
Thank you. And I must say that I do applaud your engagement to date and your direction. And I thank you for that, because I think that's very admirable. One other comment, just on another page. When you're considering your lending practices, just try and keep the lights on.
Okay.
Noted.
Thank you, Mr. Weller. I think we'll only take about 1 or 2 more questions, because I think we've dealt with most of the issues that seem to be of concern to shareholders. So maybe one from microphone 1.
Chairman, I would like to introduce Stuart Brew, who is a shareholder.
Good morning, Madam Chairman. When I attend bank AGMs, I continually hear that we're embracing technology, we're spending thousands of dollars, probably actually millions nowadays, on improving our apps and our websites, such that they now, jump through hoops. They do virtually everything you want to do. But when if I transfer money to someone else who's got a CBA account, it's transferred immediately, which is really good. But if I transfer money to another bank or vice versa, sometimes I'm lucky if it's done within 24 hours. And I think this really should only take about an hour, with today's technology. And the reason I don't keep a lot of money in the CBA, because the interest, the deposit rates that you guys pay are very, very low, and you can go anywhere else and get much better rates. So if I trade through CommSec, I'm told I've got to pay it within 2 days. I have to transfer the money in, and there's a bit of a risk whether it actually gets in time to pay CommSec. So it's just an issue I have, and I thought it'd be a change of subject really from what you've been dealing with. So, can the banks get together and speed that up and make it 1 hour? Thank you.
So Mr. Brew, we do have our BMIT product, which you can use, but in fact, the banks have got together with the Reserve Bank, and there's the New Payments Platform, NPP, which does, if you register for that, and you can register using your mobile phone, doesn't have to be your account number, and then you will get instantaneous transfers. So perhaps we can get you connected with one of the customer service people after the meeting, and they can give you more background on how that works.
That's from bank to bank, is it?
Yes.
Oh, okay. All right, thank you.
Microphone 2, I'll just take 2 more questions, this one and one more. So microphone 2.
Chairman, I would like to introduce Ms. Sally Malik, who is a shareholder.
Good morning, Madam Chairman. I'm also representing Australian Shareholders Association this morning. Can I start by complimenting you on your courtesy, attentiveness and patience? We've heard quite a bit this morning about the complaints handling process and business re-engineering to make it better and simpler for customers. So this is requiring quite an extensive culture change, we hear. I'm just wondering, could you tell me or tell the shareholders why the board chose Matt Comyn and why they believe why you have so much confidence in his leading the transformation?
Well, thank you, Ms. Malik, and I'm delighted to answer your question. So in terms of choosing Matt, and the board had very clear criteria as we went through what was a very robust process. It looked through internal, external candidates and onshore, offshore. Clearly we were looking for someone with broad banking experience, long-term banking experience, and Matt brought that. We were also looking, as you would expect, for someone who had personal attributes that were clear in terms of transparency and integrity and empathy, and Matt, as you would have seen this morning, clearly has those. We also looked at what Matt had done as head of the retail banking group, and he had introduced a program a couple of years before in terms of better customer outcomes. So he was very focused on the importance of customer outcomes, and at the same time a process around risk management, improving risk management in the retail bank. So we could see that he understood the importance of the customer, but also making sure that in the operations of the bank we manage the underlying risks. But most importantly, when we had the AUSTRAC proceedings filed, which, as you know, we weren't aware that they were coming, immediately Matt stepped up and took accountability not just in his area but more broadly across the organisation, for understanding what the issues were and deploying resources and cooperating across the group with how we got on top of this problem, how we understood the root cause, and we implemented the solutions. And that is actually what you want to see, and you want to know how a chief executive will react in a crisis situation, whether they can cope with it, whether they actually step up immediately, and then how they respond over time, not just in the moment. And I think we had several months to observe Matt in particular and how he stepped up in the moment and then continued. And on top of all of the other attributes, that confirmed that he was the most outstanding candidate to lead this bank. Thank you. So, microphone 4, and this will be the last question.
Chairman, I would like to introduce Mr. Justin Goodfellow, who is a shareholder.
Morning, Chairman. Nice of you to all be wearing poppies. Thank you for that. Yesterday was probably profitable for very, very few of us, but Sunday is important to all of us. Thank you for that. I was wanting to ask about this change of culture and how you hope for it to continue long term if it's successful. None of us want to be back here in 5 years. You could make the business argument that in the face of an incredibly weak regulatory system and a fairly business compliant federal government, that a lot of the scandalous activity were fairly good business decisions. Of course, morally and ethically, they scandalous and indefensible. But it would appear that if you're looking for your morality and ethics, the banking industry isn't the place to be looking at the moment. So I wanted to know that if this is, hopefully we haven't just been through an unconscionable activities era, and now we're going to enter a contrition era that'll last a few years, but then for us to go around in a circle again and find ways to be back in the same position. How can this better culture, better, simpler program last medium term, long term?
Well, thank you, Mr. Goodfellow. That is the fundamental question which the board has been addressing. And we were, as you know, in the APRA report, rightly criticised for supposedly solving issues, but the issues weren't solved and they resurfaced. So our absolute determination this time is to get to the root cause and permanently change our processes and our policies and our remuneration frameworks to make sure that the solutions that we put in place are systemic and don't cause the issues that have led to the unfortunate circumstances to resurface. So the important thing there is, so for example, in response to the APRA report, and there are 35 recommendations, and we could just respond to the 35 recommendations, but we don't feel that would be getting to root cause. So what we've done from that report is stand back and say, what do the recommendations tell us about the fundamental underlying issues that we have, the themes? We've then worked out how we respond to those themes, and then in doing so, cross-check that actually we will have addressed the recommendations. So it's a completely different mindset which doesn't focus on the issues. It tries to focus on the themes and the root cause to get that fundamental re-architecting. Thank you. All right, well, can I thank shareholders for all of those questions, because they have touched on all of the fundamental issues that the board is working through with Matt and his team, and will continue to work through with a resolute and determined focus. So I now move to agenda item 2, which is the re-election and election of directors. We have the election and re-election of 2 directors, and the resolutions will be dealt with separately. As I am the first candidate for re-election, I will now ask David Higgins, who is chairman of the Remuneration Committee, to take the chair for this item of business. David.
Thank you, Catherine, and good morning, ladies and gentlemen. The board considers that both directors standing for election and re-election are independent. Each director standing for re-election or election will be briefly address the meeting about the candidacy. Item 2A is for the re-election of Catherine Livingstone, who in accordance with the bank's constitution retires as a director and offers herself for re-election. Catherine's been a member of the board since March 2016 and has been chairman since January 2017. She is chairman of the Nominations Committee and is a member of the Risk, Audit and Remuneration Committee. The board, with the exception of Catherine in relation to her own re-election, recommends the re-election of Catherine Livingstone. I now invite Catherine to address the meeting.
Thank you, David. And I'd like to take this opportunity to address you in my personal capacity and as a candidate for re-election to the board. As David said, I joined the CBA board 2.5 years ago in March 2016. As an independent director and then for 2 years now as chairman, I have sought to understand our community's expectations and our business. As we've indicated this morning, the Commonwealth Bank plays an important role in the lives of many Australians and businesses. And as APRA has noted, the community holds high expectations for CBA, as does CBA itself. And as I said in my address, this has been a challenging period for CBA and the board. With my fellow directors, we are determined to address those areas where we've let our customers, our people and our shareholders down. I'm standing for re-election as a CBA director today in the knowledge that the CBA board must continue to listen to and deliver for our customers, our people, our shareholders and our community. My career history and educational qualifications are set out in the notice of meeting. Should I be re-elected, I look forward and would be honoured to continue to serve as a member of the board.
Thank you, Catherine. And I now ask, are there any questions that relate to Catherine's re-election as a director? Am I correct in understanding there are no questions? Sorry, microphone 1, yes.
Chairman, I would like to introduce Mr. Lee Keelton, who is a shareholder.
Thank you, Mr. Chairman. I don't have any difficulty with voting in favour of Catherine Livingstone as chair of CBA. I do have a problem in view of the difficulties facing the bank at the moment and what appears to me to be a lack of focus in many cases on the board, that she sits on a number of other boards who presumably also demand some of her time. I would think in view of the current circumstances, I would be a little cautious about sitting on other boards when there's so much work to be done in CBA.
Thank you, Lee. I can say personally that Catherine's contribution and effort, I talked to her quite a lot out of hours and that, and she seems to be on the ball 24 hours a day, but I can refer Catherine if she wants to add any comments about that, of resources.
Yes, so in terms of my commitments, I'm actually only on one other listed company, and I have a view that being on 2 listed organisations is actually important for the cross-learning that comes from them. But I can assure you that I give the Commonwealth Bank all the hours that it needs in order to discharge my responsibilities on the board and as chairman.
Thank you, Catherine. There being no further questions, I now put the resolution to the meeting. Displayed on the screen are the details of the direct and proxy votes received in relation to the resolution. Please now mark your voting cards in relation to item 2A, Catherine Livingstone's re-election. I now hand the chair back to Catherine.
Thank you, David, and thank you, shareholders, for your support. And I certainly, going to the previous question, I don't underestimate the hard work in front of me and in front of us as we strive for performance and accountability and integrity. I now move to item 2B. Item 2B is for the election of Miss Anne Templeman-Jones, who in accordance with the bank's constitution retires as its director and offers herself for election. Anne has been a member of the board since March 2018 and is chairman of the Audit Committee and a member of the Risk Committee. The board, with the exception of Anne, in relation to her own election, recommends the election of Anne Templeman-Jones. I now invite Anne to address the meeting.
Thank you, Chair. Good afternoon, ladies and gentlemen. I was appointed to the board in March of this year and became the Audit Committee Chair in October. My current and former directorships, together with my qualifications, are detailed in the notice of meeting. My experience as a non-executive director comes from a broad range of sectors, including media, professional engineering services and financial services. I have also been privileged to serve as the chair or as a member of the Audit and Risk Committees on some of my current and past boards. Prior to this, I had a 30-year executive career in which I held audit and accounting roles and developed deep operational risk, governance and strategic expertise through corporate and private banking positions in Australia and overseas. As we know, the bank has suffered a series of conduct and compliance issues as highlighted by the Financial Services Royal Commission, the APRA Prudential Inquiry and the AUSTRAC legal proceedings. The bank is now implementing the necessary simplification and accountability frameworks and cultural change to ensure these issues do not rise again. I firmly believe that with my operational risk, governance and strategic expertise, I can provide invaluable insights and experience as the board oversees the program of change. I am a committed professional non-executive director and I believe I have the time and capacity to fulfil all the obligations of my role for both CBA and for the other board roles that I hold. I am honoured to be a member of the board and with your support I look forward to continue to contributing to the future of the bank. Thank you.
Thank you, Anne. So are there any questions in relation to Anne's election? I think we have a question at microphone 1.
Chairman, I would like to reintroduce Vivian Tolliday, who is a shareholder.
I believe Anne also sits on the Wally Parsons board with you, Catherine. Would you care to comment on that? And hopefully this is not the beginning of an old girls' network.
Indeed not, Ms Tolliday. It was a conjunction of timing which was a complete coincidence in terms of Anne's appointment to the Wally Parsons board at the same time as we were considering her for the Commonwealth Bank board. If there are no further questions, I'll now put the resolution to the meeting. Details of the direct and proxy votes received in relation to this resolution are displayed on the screen. Please mark your voting card in relation to item 2B, the election of Anne Templeman-Jones. That takes us to agenda item 3, which is the adoption of the remuneration report. And the resolution is to adopt the bank's remuneration report for the year ended 30 June 2018. The remuneration report is included in the bank's 2018 annual report. As you know, the board made extensive changes to the executive remuneration framework during 2017, with the changes becoming effective on 1 July 2017. And this year's report includes enhancements made to risk and remuneration frameworks and governance in relation to the 2018 financial year, as reflected in the remuneration outcomes for the CEO and group executives. The key changes introduced included increased weighting of quantitative measures in determining short-term variable remuneration outcomes for the CEO and group executives to provide a clearer basis for assessment. Deferral of 50% of short-term variable remuneration into equity to increase the alignment with shareholders, and increasing the vesting period from 1 to 2 years. Introduction of a new long-term variable remuneration measure, one focused on trust and reputation and the other on employee engagement, but both of those underpinned by a positive total shareholder return gateway. And finally, allocation of long-term variable remuneration rights on a face value basis to support greater transparency. It's a key principle of the board that executive remuneration outcomes must strongly link to performance outcomes. They must also demonstrate full consideration of executive accountability, including for risk and reputation matters, both individually and collectively. In 2018, the board strengthened its risk review processes, including in relation to executive risk scorecards, to provide the board with more comprehensive information to support determining the appropriate consequence to be applied to executive remuneration. These risk scorecards are independently reviewed and challenged by the Group Risk Officer. In addition, as part of the 2018 annual review processes, the Remuneration Committee met jointly with the Risk and the Audit Committees to ensure that all relevant risk and audit matters were considered in determining executive remuneration outcomes. As I noted in my address, executive remuneration outcomes, as disclosed in the Remuneration Report for current and former executives, were directly impacted by the AUSTRAC settlement, the APRA prudential inquiry, and consideration of other risk and reputation matters. This included, in some instances, full forfeiture of all unvested long-term variable remuneration rewards for certain former group executives. In March 2018, the incoming CEO, Matt Comyn, offered to forego his 2018 short-term variable remuneration award in full, and the board accepted that offer. Further, the board and the former CEO agreed that as CEO, he had the highest level of accountability of all group executives for the findings of the APRA prudential inquiry, and as a result would not receive his 2018 short-term variable remuneration award or any of his remaining unvested long-term awards. They were all forfeited. The APRA prudential inquiry report has provided the bank with a clear roadmap of action. This includes continuing to strengthen the board and management governance of non-financial risks and being clear on accountability at all levels of the organisation. And where our exacting standards of risk and customer outcomes are not met, our performance and remuneration frameworks are clear in their application of consequences. Equally important is that executive remuneration reflects the group's strategy, it rewards sustainable outperformance, and is aligned with shareholder value creation. In addition to rewarding our executives for strong total shareholder return outcomes, the trust and reputation and employee engagement measures reinforce the importance of balancing the needs of shareholders and customers with the expectations of the broader community and ensure that our employees remain proud advocates of the bank. We are confident that these targets are set at a challenging level, requiring true outperformance before rewards can be achieved. If shareholders have any questions relating to the remuneration report, please now move to one of the microphones. Microphone 1, please.
Chairman, I would like to reintroduce Lee Keelton, who is a shareholder.
Thank you, Chairman. I'm sorry to come up to the microphone again, but I do need to talk about this. In terms of your sustainable development goals, which you subscribe to the shareholders, it is, we deliver sustainable financial performance through strong conduct, culture, governance, accountability, remuneration and responsible business practices. In my book, I'm afraid the board has failed on all of that. And I know that you expressed remorse earlier on, and I talked about that, and you also said that you hold yourselves fully responsible for that. Take full responsibility. I haven't really seen evidence of the responsibility that you're taking that is hurtful and meaningful like it has been to shareholders. You said that you're reducing your fees by 20%. When I look at the remuneration report, I don't really see any evidence of that 20% reduction for most of the board members. So I'm not quite sure where the 20% comes off. but not only do you earn fees for being directors, which are quite substantial, if you forwent all of those fees, I don't think any of you would be queuing up for welfare benefits knowing what you earn anyway. I would suspect that not only do you earn your $250,000, or in your case close to $1 million, you also earn additional funds for being on separate committees. My problem earlier on that I expressed was with the Risk Committee, but that includes the entire board as well as the Risk Committee, where the chair of the Risk Committee earns an additional $65,000 and the members earn an additional $32,500 over and above being paid for being on the board. Now, the Risk Committee has let us down significantly because they have not addressed the issues that have only been subsequently brought out by external regulatory bodies. So I don't see any justification for us paying the Risk Committee in addition to the board, quite frankly, for the period that this has been under scrutiny. I also look at, just as a minor point, but it goes back to this culture of, I suppose, executive greed, which is foremost in many people's minds. Why is it that we pay one of the directors for tax advice and health benefits? I see absolutely no reason why the director concerned, and we all know from the report who that is, why we are paying $300,000 plus we pay their health benefits and their tax advice. I just think that is iniquitous and just reinforces public anger and shareholder anger for this sort of executive greed, perceived or otherwise. Whilst I'm on the Risk Committee, we have a Chief Risk Officer, who I believe is now the Deputy CEO. I don't see any reference to any reduction in his total annual remuneration, according to the report. Now, he is the person presumably entrusted at management level with risk assessment. So, Chair, as a fairly disgruntled shareholder who's had to stump up $700 million, which is the equivalent of 40 cents per share, why people are not actually taking any pain. You can say you're sorry as a board, but show that you're sorry and forego your fees for this year. Thank you.
Thank you, Mr. Kilton. So I can assure you the penalty on directors' fees has been flowed through, and we can take you through the detailed calculations, but every director has, and former director, has suffered that penalty on fees. The directors don't receive any variable remuneration, as you know. It's all just in the base fee. We have also, as part of the board renewal, obviously been seeking to add new directors, and in that context we formed the view that a 20% penalty on our base director fee reflected the fact that we recognised we had collective accountability along with management for what had happened, but we still need to be in a position to attract new directors onto the board as part of our board renewal program. And I would also add that you will recall that last year all group executives, in terms of their short-term variable remuneration, that was all set to zero, and in the current year certain executives have received zero again. So the board has exercised discretion across the board, and all group executives, taking the outcome from their scorecards, whatever that outcome was, in a risk-assessed basis, were then subject to a further 20% reduction on that scorecard outcome for collective accountability for risk matters in the 2018 year. So that was in addition to the penalties that they had suffered for the AUSTRAC issue. So can I...
To answer, I asked about the tax advice and the health benefits on top of directors' fees. Can you just answer why we should be selective and give tax advice support to people? I mean, I don't ask you to give me tax advice support.
That is, in fact, to make sure that we as the Commonwealth Bank meet our obligations in terms of the tax payable by an offshore resident. Microphone 1 again, please.
Chairman, I would like to reintroduce Paul Fanning, who is a shareholder.
Thank you, Catherine. I'd like to draw 3 items in the remuneration report. First one is page 99. It's under subheading Exit Arrangements. Robert Dyson, who was the CFO, had a 50% of Rob's relocation costs provided in 2008 financial year were recovered. Interesting comment. You might like to paint a bit of colour on that, Catherine. I gather the bank paid relocation expenses, and at the point when he left the bank, it was within a certain time frame that he had to repay, not sure. Turning to page 107, Remuneration Report, Director's Report, STVR Performance Outcome Metrics, and Catherine, you have partially answered my question, but I think we just need a little bit more colour. Matt, I appreciate you having renounced your STVR for the 18 financial year. A great admiration for you to do that. And I would have liked to have seen it perhaps mirrored through to some of the current executives. I know some of the executives here have got a STVR achievement of 0 or NA, but Matt, I think you really want to, hopefully your bigger and direction will flow through into the executive ranks. And given the Royal Commission findings so far, I think some of the current executives are still answerable, and probably short-term incentives probably, they should have taken into account. Yes, they have been pared back, Catherine, as you have indicated, which is good, but maybe some of the executive manager could have taken Matt's lead and say, well, I'm going to hit the nail on the head. I'm going to renounce my STVRs for this year. And the third item on page 118 to 119, loans and other transactions, subsection 7. Is this a normal practice or good corporate governance where loans are made to executive personnel, and I don't know, to KMP, for perhaps investment in CBA shares? Some other ASX 200 organisations probably don't allow this loans to executive personnel to purchase additional shares in the company. So I pose those 3 questions, Catherine.
So thank you, Mr Fanning. So in terms of the loans to KMPs, that is a disclosure. Those loans are made to individuals in the ordinary course under standard commercial terms and conditions. It's just for transparency that we disclose them because they are KMPs. So they are on the same terms as any one of our customers. In terms of Rob Jasudison, yes, he was relocated from Hong Kong, where he'd been running the IFS business, and he was relocated to Australia to take up the role as CFO. And under the terms of that relocation, he had to stay in the CFO role for a certain period, or those relocation costs would have to be repaid pro rata, which is, as you pointed out, what happened. And then in terms of the STVRs for the current year, so the board, in determining outcomes, distinguished between the consequences it was going to apply for the AUSTRAC and the APRA report, the findings, and that was included in the 100 million that we've spoken about in terms of those consequences. And much of that 100 million was delivered, the penalty was delivered through the deferred remuneration, which is why we have deferred remuneration, so that if subsequently matters come to light, we still have remuneration on foot that we can effectively withdraw. So that 100 million was delivered through deferred remuneration, which you don't actually see in the report other than for the most senior people. The FY18 outcomes on the short-term variable REM related to FY18 performance standalone, which is why there were awards, and you would see they're much lower than usual. And the average across all was 19% of maximum, or just over 30% of target. Matt made the personal decision that he wouldn't take an STVR as incoming CEO, and the board accepted that offer.
Thank you, Catherine.
Thank you.
I posed challenging questions of me. Thank
you. If there are no other questions, so on the screen are details of the direct and the proxy votes received in relation to this resolution. So please mark your voting card in relation to item 3, adoption of the remuneration report. That takes us to item 4. Item 4 is a resolution for the grant of securities to the CEO, Matt Comyn. The grant will be in the form of reward rights under the long-term variable remuneration framework. And this framework aims to focus the efforts of participants on achieving superior performance for the bank's key stakeholder groups, being customers, community, people and shareholders. Participants in the 2018 Long-Term Variable Remuneration Award include Mr Comyn and the bank's group executives, in total 10 individuals. Shareholder approval is sought to grant a maximum of 54,364 reward rights to Mr Comyn under the Employee Equity Plan. I should note that while approval is being sought for the maximum potential award, Matt will only receive value from these reward rights after the performance period if the performance conditions are met over that 4-year period. Any vesting of the reward rights will be assessed by the board as at 30th of June 2022 and are subject to a further risk and reputation review and board discretion at that time. If circumstances warrant, the board may adjust vesting outcomes, including if they are not considered reflective of actual performance. The performance conditions are described in detail in your notice of meeting. However, in summary, 75% of the award is subject to total shareholder return, a measure against a peer group of the 20 largest companies by market capitalisation on the ASX at 1 July 2018, excluding the bank and resource companies. 12.5% of the award relates to trust and reputation and is measured against the RepTrak Pulse Score survey, which uses 4 equally weighted questions to test the trust, respect and admiration for each company in the peer group. The final 12.5% of the award is measured against the Employee Engagement Index, which again uses 4 equally weighted questions related to satisfaction, commitment, advocacy and the pride of our people over the performance period. In addition, the trust and reputation and employee engagement performance outcomes will only vest if there is positive TSR achieved over the period. This ensures that no vesting occurs unless the change in shareholder value over the period is positive. And I'd also note that there are no dividends until the rights vest as shares. And full details of this are outlined in your notice of meeting. So if shareholders have any questions in relation to the grant of reward rights to the CEO, Matt Comyn, could you please move to one of the microphones? So microphone 2.
Chairman, I would like to again introduce Sally Melick, who is a shareholder.
Madam Chairman, can we ask why the amount of the grant is almost the same as that previously calculated for Ian Narev? There's been a 17% cut in the base pay, but the maximum possible remuneration, as reflected in securities that can be awarded, is only slightly lower.
That's correct, Ms Melick, and the distinction between the previous long-term variable reward scheme and now is that there are no dividend equivalent payments made over the four-year period. So as I said, there are only dividends paid once the shares vest. Previously, they were paid each year during that 4-year performance period, regardless of performance. So that is quite a significant adjustment, and that's where effectively it's not just 17% because there's a further 11% because of the adjustment that we did to the maximum potential for the LTVR coming into this year. But that's where the reduction occurs. There being no further questions, I now put the resolution to the meeting. So on the screen are details of the direct and proxy votes received in relation to the resolution. Please mark your voting card in relation to item 4, the grant of long-term variable remuneration securities to Matt Comyn. That now concludes discussion on all the items on today's agenda. So please mark your green voting card and place it in one of the ballot boxes that representatives of Link Market Services are now holding or are near the exits. And if you need any assistance in completing your card, representatives of Link are available in the room to assist you. If you are a shareholder and a proxy holder, it's important that you complete 2 green voting cards, one in your own right and the second as a proxy. As mentioned previously, the results of the poll will be released to the ASX and on the bank's website later today. I declare that the poll will close 15 minutes after the meeting closes. Shareholders, thank you very much for your attendance today and for all of the questions. And my fellow directors welcome you to join us and the bank's senior executives for a light lunch outside. I now declare the meeting closed. Thank you.